Bitcoin was born in a financial crisis. It will come of age in this one.
That was Pantera, a suitable intro for today's guest, veteran investor Dan Morehead, the CEO of Pantera Capital. Hello there, welcome to the What Bitcoin Did podcast, which is brought to you by Kraken, the best place to buy, sell and trade Bitcoin. How are you all coping with the lockdown? Are you all doing well? I'm here in Bedford, adapting to this new life, thinking about a post-coronavirus world. Anyway, let's get on with the show. But firstly, we are going to hear about my amazing show sponsors who I couldn't make this without. So first up, we have the amazing BlockFi, the future of Bitcoin and financial services. And this week I sat down with Zach and Flory, the co-founders of BlockFi. We talked about how they managed the recent volatile conditions. That will be out next week. And we also get into some of the questions that people have around the company. They have absolutely crushed it as a business. They've just raised another $30 million and they will crush it this year as well. Now, if you don't know BlockFi, they have two main products right now. They have their interest accounts, which allows you to put your crypto to work and earn monthly interest payments. They also have their crypto-backed loans, which allow you to access liquidity without selling. By using your crypto as collateral, you can unlock up to 50% of the value of your assets in USD. If you are interested in checking out BlockFi, I recommend you do your own research. Then head over to blockfi.com, which is blockfi.com. Also, we have the mighty Kraken, the best place for trading Bitcoin. And have you checked out their beautiful mobile-first app? Have you used it? Have you tried it out? Come on, go and download it. Whether you're sat at home in your garden, trying to get some of this Easter sun, or sat on the couch watching the Tiger King, you can now trade Bitcoin on the go. And despite all this price volatility, the crisis has seen a huge surge in interest in crypto, and Kraken are hiring. They are looking to increase their workforce by 10%. Kraken provides you with a broad suite of tools for trading Bitcoin. You've got everything from kraken.com for your traditional trading all the way up to their OTC desk. They are the most secure crypto exchange. They provide their customers with world-class support. There is no better place to trade Bitcoin. If you want to find out more, head over to kraken.com or download the app, which is available for the iPhone and Android. Just search for Kraken Pro, which is KrakenPro. All right, so onto the show, and today we have a veteran investor and the CEO of the best named investment fund, Pantera Capital. I have wanted to get Dan on the show for a long, long time. I mean, mainly, I just wanted to find out if, like me, he is a 90s thrash metal fan, but also following the monster blog post he wrote this week about crypto in this financial crisis, I wanted to get him on. I wanted to get his take on all this crazy shit that's going on. A couple of weeks ago, I did an interview with Raoul Pal covering the current macroeconomy situation, and it was a fascinating conversation for me, but I still had questions. So I got in touch with Dan, asked him to come on and discuss the economy in a post-coronavirus world, where he sees the opportunities and where he sees Bitcoin's role in all of this. So I hope you enjoy this one. If you've got any questions, you know you can hit me up. My email address is hello@whatbitcoindid.com. Also, a couple of things. If you want some additional content, if you haven't checked out my other podcast, Defiance, please do go and check out that. Some other interesting interviews there outside of the Bitcoin space. Also, you can check out my two films that I've made. That's all available at defiance.news. Also, I've got a poker tournament this Sunday. I'll explain more about that later, but my other sponsor, sportsbet.io, have put a Bitcoin up in prizes. If you want to register for that, please head over to my Twitter and find the link there. All right, onto the show. Hope you enjoy this one. Morning, Dan. How are you?
Great. Peter, thanks for having me on.
Not a problem. You probably don't know this. I've wanted you on the show for quite a long time.
Well, thank you. Yeah, we did a period of not doing much media, but I think there's something really big going on in the world right now, so we're very happy to share. Thank you.
But I've always had a question I've wanted to ask you, and it's either going to be the answer is either going to fill me full of joy or leave me flat. But where did the name for the fund come from?
Oh, I can tell by the smile on your face you might be a hard rock aficionado. We did not, in fact, name it after the band, which would be great. I used to work at Tiger Management, and all of the fund names were named after big cats. Panther, Puma, all that. And so as a homage to Julian Robertson and Tiger, I picked Pantera, which is panther in Italian and Spanish. And then it also suits a global macro hedge fund perfectly because Pantera means spanning the earth in Latin.
Well, for me, Pantera means a vulgar display of power. It's 90s hard rock. I was a massive, huge Pantera fan. I saw them play Donington. So I've always looked at your... serious. I saw them play Donington Monsters of Rock. Phil Anselmo, the singer, had his knee fully clasped up because he'd popped his knee. And one of the highlights of my childhood. So whenever I've seen the fun name, I was like, really? Has this got anything to do with the Pantera? But no, clearly it hasn't. So anyway, great to get you on the show finally. So this is a Bitcoin only show, and I also tend to keep things a little bit more simple. I tend to dedicate my show to for people who don't have maybe the time to spend hours upon hours reading about markets, reading about Bitcoin. So sometimes when you're explaining things, I might get you to maybe explain it a little more simply than you would normally do. Are you okay with that?
Oh no, that's my level of understanding as well.
All right, good. All right, well, listen, look, very strange times right now. And I'm here in the UK, which is very strange at the moment. And I believe you're in San Francisco, right?
Yeah, in Woodside, Silicon Valley.
And how are things there at the moment?
It's actually kind of calm. Our county was one of the first to go shelter in place. So it's actually almost 3 weeks now. And people seem to be kind of getting into the rhythm of it. I saw a really cool stat the New York Times did today on the movement of people in various cities. And San Jose, which is right next to us in San Francisco, a certain segment of the society literally has zero movement. They're literally staying at home. So,
wow.
It really has, everything's kind of shut down.
Wow. All right. Well, listen, before we get into this, because I'm going to use your most recent newsletter, Crypto in Crisis, as a structure for what we're going to talk about today. But just give people a background to your career so they understand the context of this interview and the things you've done in your career.
Sure. So I started out as the first asset-backed securities trader at Goldman Sachs. So it was the mid-'80s. Mortgage-backed securities were just, coming into their own, and trading asset-backed securities like auto loans, credit cards was just starting. And it's pretty wild now to be trading asset-backed tokens. So we've come full circle in 30 years. And then I transitioned into global macro hedge fund trading. So, trading big disruptions, which is incredibly relevant today. And then ultimately went to Tiger Management in the late 90s, working with Julian Robertson, and really just trying to find big disruptions in the world. Things like Russian privatization or Middle Eastern equities or Argentine farmland. Something like that would come up every once in a while. But when I saw Bitcoin in 2011, it started, kind of really piqued my interest. And it took a year or so to really get my head around it. But I came to believe it was going to be by far the biggest disruption of my career. And I still believe that. I think it's, orders of magnitude bigger than those other trades that I did. And those other trades I did were fun. They were interesting. We made some money. But I think Bitcoin's actually going to change the world for the better. And I think billions of people their lives are going to be better off for Bitcoin. So, it's my career, and, we manage money for other people where our job is to give them the best returns we can. But a huge part of this is, I really think when we look back a couple decades from now, Bitcoin is going to have changed the world. And it's kind of, it's fun to be a small part of that.
Wow. Okay. So you've had a career of over 30 years in financial markets. I guess you've never stopped looking at the markets. And you've probably traded and lived through some very complicated times. 9/11, obviously, for the US, that impacted globally, but was a human disaster, but also it was a economic disaster for a short period of time. And you've also lived through 2007 to 2009, the recession there. What we're going through now, how do you take this all in and put that into context for you and your career so far?
Yeah, I'm actually really grateful that I've had 35 years of trading these disruptions and cycles, because I think that perspective has been very helpful. We sent a note around internally just 3 weeks ago. It was March 10th. Only half of the economists on Bloomberg were predicting a recession in the United States. And I sent a note saying, this is crazy. It's 100.0% chance of a recession. And since then, obviously, the virus situation's gotten much worse, and then the kind of follow-on economic situation's much worse. So to put this in perspective, all of the previous disruptions that we traded, like you mentioned, 9/11 was particularly a United States issue. There's been a few recessions that have been regional, something like the Southeast Asian currency crisis in the 90s, that have affected more than one country. This is really the first thing that's affected every single country. That's what's so unique about it. And up until 10 years ago, the IMF called it a global recession if growth was less than 3% positive, which, this thing's going to be a huge negative. So we hadn't had, from World War II until 2009, we hadn't had the global GDP go negative, ever. Like, we had 50 years of always going up. The US might be in recession, but the rest of the world is fine, or Southeast Asia might be in recession, and the rest of the world is fine. This is the entire globe is going into a recession. And just to put things into kind of, you asked to dumb it down, this is the simplest way to think about it is the least bad way to combat this virus is if everybody on Earth sheltered in place for 2 weeks. And then we test the people who have symptoms and they get medical treatment and everyone else gets back to work. That is the minimum to deal with this thing. And 2 weeks divided by 52 weeks is 4%. So the minimum hit from this thing is 4% of GDP. And right now, we're certainly not doing it that way. We're not having everybody in our stock. We're kind of, China stopped and now they're starting and now other places are stopping. And so I think the impact to global GDP is going to be unprecedented.
All right. So help someone like me understand this. When you talk about a 3% growth still being growth of GDP can still lead to recession, somebody like me thinks, well, hold on. If we're bigger than last year and we were good last year, how does 3% growth still lead to recession? How come we can't just take a small haircut? Help someone like me understand why growth is so important, the rate of growth is so important. What is the trickle effect of not having the right levels of growth?
Well, yeah, the kind of since the Industrial Revolution, we've seen incredible increases in growth per capita, and we've really come to expect that. And so we view trend as being several percent of positive growth. It's just kind of the natural benefit of enhanced productivity or other ways that we become more wealthy per capita. And the stat about the IMF thinking a recession was anything less than 3% positive growth is very similar. When I moved to Japan in the early 90s, essentially during their disruption, I was trading interest rates and equity derivatives. And Japan had been in a 50-year growth expansion, and they were just starting to reel from the decline of the Nikkei. The Nikkei fell 80% ultimately, and they had overnight rates at 6% at the time, and were forecasting what they called a Japanese recession, which is like the IMF's definition, positive growth but less than 3%. And so I think it's hard for people to get their heads around. Growth doesn't always have to happen. And if there's something like this, which is global in nature, it really can make all of growth shrink. There are calls now. It's amazing how fast things are changing. We wrote our investor letter about a week ago. And at the time, it's probably the most, it's on the edge of being the most strident, forecast of what's happening. Since then, Goldman Sachs has revised their growth rate for the United States to minus 34%. Seasonally adjusted annual rate, right? Like just numbers that are just off the charts. And we just saw in unemployment claims, the last recession, I think the peak was 400,000 or something like that per week. And we've had 6 million. I mean, it's just, these things are literally off the charts.
Yeah. And one of the things you mentioned early on is the fragility of supply chains. And I was thinking about it the other day. I was trying to think about different kind of scenarios. So we go and do our shopping and they're keeping the food supply chain going, which is great. But then I was thinking about, well, what about the companies that build the machinery that the farms use? Are they still going? Or what about the chemical companies that are providing the supplies for the shampoo manufacturers? And then I was starting to think, well, does even the basic supply chains that we need in terms of kind of food and keeping the energy services going, are they at risk because of breakdowns in other areas of the supply chain? And then I couldn't help but think, well, also, what about all the small islands, all the small holiday resort islands that rely on all their food to be imported? And I guess some of the effects on this we're not going to see for perhaps months.
Oh, yeah. We did feature Milton Friedman's Free to Choose pencil clip in our investor letter. And I think it's a great analog for what's going on here. It's a couple-minute video. It's on YouTube. If anyone's interested, you take a look at it. It's great. He just says there's no one on earth that could make this thing. He's holding up just a normal lead pencil. And, it costs like 5-10 cents, but there's nobody that has the skills and complete ability to make it on their own. Somebody had to cut the lumber down, and somebody had to build the saw, and to get the saw, somebody had to make steel. And it's just an incredibly complicated thing to build even the simplest little household item. And I really think that's the issue here, that trying to restart all these supply chains could be very, very difficult, especially with the asynchronous nature that the virus is ebbing and flowing around the world. So, China basically shut down completely for 2 months. It's trying to restart, but all the people they'd be selling their products to are now all shut down. So it's going to be really hard. And the supply chain breakdown is evident in things that are not very high tech, like toilet paper. It's completely sold out of every store in our area. And that might be irrational, and I'm not, going to use that as like some super deep metaphor, but it's just saying that if you can't keep a supply chain for something so simple as toilet paper moving, it's going to be really hard to put a ventilator together. Yeah. There's 1,500 parts to a ventilator that come from 25 countries. I mean, that's really the issue, is that with the entire world kind of frozen, it's really, really difficult to restart these supply chains.
Yeah, it's interesting you mentioned that piece from Milton Friedman, because I'd heard the statement before about making a pencil, but I'd never heard the full explanation. I actually even printed it out here in front of me just in case I needed it. But you also put another quote from Milton Friedman at the start: "Free to choose. A personal statement maintains that the free market works best for all members of society." Have you always been a believer in free markets, or is this something that you're considering at a deeper level now because of what is actually happening and the decisions that the governments are having to make with regards to bailing out companies, for example?
Well, yeah, I mean, I think, the last century's proven that a free market is better than the other systems people have tried. And, growing up in the 70s and 80s, it was almost a religion because we were in kind of an active war with the command economies on Earth. And, ultimately, the command economies all kind of failed and now are market driven. But it is, when I was rereading it, it is ironic that, Milton Friedman's, concept that a free market works best for all members of a society. It might not be true that if every county and every state and every country is free to choose their own policies, it might be suboptimal right now. And it's just, it's a poignant thought that, right now we actually need to all be pulling together and using the same policies rather than every small group around the world, trying their own thing.
It was funny. I went and researched him afterwards. I know who Milton Friedman is, but I found an interesting quote where he said, "I'm a libertarian with a small I and a Republican with a capital R."
Oh, that's funny.
Yeah. So what is your view on this, though? Do you believe that the US government should let companies fail? Do you believe they should be bailing out companies? It's quite an interesting time because I saw a quote somebody put on Twitter that I can't remember exactly. It was along the lines of, company owners have never had a time like this where they have zero income and they can't plan for when their income will start again. Yeah,
so I saw a great tweet where somebody said $2 trillion and then 330 million Americans, that's $6,500. Where's my other $5,200? And that is a great way to say it, is if we're going to spend, $6,500 per person, which is, $20,000 per family, it'd be great to see it get to the people who are really vulnerable. And my partner actually's read the entire stimulus bill. I haven't yet, but there's huge things in there about like chargebacks of real estate depreciation and stuff like that. I'm not entirely sure, how that's really going to help the economy.
Right. Okay. You also talk about the Great Depression in there, and I was watching a documentary about that the other day, and it's very hard to even comprehend what it was like to live through that. But you noted the crash of this was twice as fast as the 1929 Great Depression. Now the circumstances are different. Like Donald Trump has obviously said, this is a pausing of the economy. The economy was in a very good shape. I mean, I don't 100% agree with him. I think something was ready to pop anyway. But have you looked at the Great Depression, and are there any parallels with that we can look at to for this, and in ways in which the market may restart?
Probably a better analog would be the 1918 to 20 Spanish flu influenza epidemic, because it has similar imports of what we're doing here. And there's very clear data that the cities all did very different things. San Francisco did essentially nothing on social distancing. Los Angeles was very, very strict in shutting down everything. Minneapolis and St. Paul had very, very different policies, even though they're right across the river from each other. And so you have these great control group experiments, and it showed that the cities that were very aggressive at doing social distancing early and kept it the longest obviously had much, much better health outcomes, much lower fatalities, but they actually had better economic outcomes. And that's the bit that I think over the next 3 or 4 weeks, people are going to start, really digging into. That there's been some talk on the national level that everything's just a trade-off. Either you want to protect people's health or you want to have the economy, humming along. And it does seem to my belief is if we really address the virus in a very intense national way for a very short period of time, ultimately it'll do less damage to the economy than what we're doing now, which is a very kind of rolling piecemeal way. So, in our investor letter, my partner Joey Krug did an analysis of how the financial markets performed into and out of the Spanish influenza, which is very similar to what we're dealing with here. And then the graph about the price of the S&P falling twice as fast as prior to the Great Depression, I think it's a great way to emphasize to people this is just completely a unique thing. All those other recessions were caused by a lack of either income or credit. And we have policies to deal with that, right? We have monetary and fiscal policy. We've dealt with, scores of those recessions over the last 2 centuries. We really know how to deal with that. This is an invisible barrier to commerce. I mean, it's completely different. And a couple of weeks ago, the Fed cut 100 basis points. And my thought was, that has absolutely zero impact on the economy. In the old days, you cut 100 basis points, people will refinance their mortgage or do something different, and it'll spur the economy. But, what are you going to do, say to your wife, hey, the Fed cut rates 100 basis points. Let's go to the movies. They could cut rates 1,000 basis points and I wouldn't go to the movies. So I just think that the policies that we're used to using, fiscal and monetary stimulus, really are going to have very little impact against this virus. And so the net of it is, where we're probably ultimately going in this discussion is that if you're using a policy of essentially just increasing the quantity of money at unprecedented rates, it probably will inflate the price of things you can't increase the quantity of, like stocks or gold or Bitcoin.
Right. Okay. Just so somebody listen to this, if they're not somebody who really understands the difference between monetary and fiscal policy, what are they and how do they work together?
So in typical times, recessions are caused by, either a lack of income because companies have laid off workers, and so people don't have the income to buy goods and services, or like the 2008-9 crisis, it was essentially a lack of credit, that there was some unwise lending done in the residential mortgage market, and so it was very hard to get credit. And to soften those blows, you can lower interest rates. And for example, in the 2008-9 crisis, the United States lowered interest rates 4.5%. So that really helps. If you lower rates 4.5%, and a lot of Americans can get a lower rate on their mortgage, and the extra money they're saving on their monthly mortgage payment they can use to buy a car or go to the movies or whatever. And in this instance, we only had 150 basis points of ammo left. Rates were already very close to zero. So it's very difficult to do any more than that. And on a global basis this time, it's even more striking. The last recession, 2008-9, globally rates were cut about 3 percentage points. So many countries are already basically at zero that JP Morgan is forecasting only 55 basis points or 0.5% of cuts globally. And, 0.5% is a pretty small amount in any case, and especially when you're combating an invisible little virus. So it seems like the policies that worked in the past, cutting interest rates and increasing spending, just won't do much. And on the spending thing, it's very typical for the government to try and run what's called a counter-cyclical fiscal policy. So, when the economy's booming, the government typically should be running a surplus, taking in more tax receipts because lots of people are earning money, so they're paying taxes, and lots of people are selling assets like stocks or real estate at profits, paying capital gains tax. So the government should be running a large surplus in the boom times. And then when the economy enters recession, the government should be able to essentially counteract that by spending more money, either through things like unemployment insurance, replacing lost income, or in infrastructure spending. It's a great time to build hospitals, universities, interstate highways, things like that. This time, unfortunately, we entered it with a huge structural deficit. Right in the best of times, the U.S. government, was spending 31% more than it was taking in. So the government already had a huge deficit, even with record employment, record stock prices. So switching from that to this new unprecedented stimulus will add an enormous amount of debt onto the balance sheet of the United States.
And if this lockdown is lengthened, if we go on for many more months, which is a potential, or we go through a period whereby we'll allow parts of the economy to get going, that's going to hamper the ability for things to pick up again quickly. So they only have the ability to keep printing money and keep giving money out there. So what is the risk there? Do we run the risk of, I don't think perhaps a hyperinflationary situation, say like Venezuela and Zimbabwe, but do we run the risk of having an inflationary situation similar to, say, Argentina had under La Corralita? Was it La Corralita? And I've never really experienced issues with inflation in the UK because it's always been at such low levels. You don't feel the pain like maybe the countries when they have 10, 20, 30% inflation. Are we at any risk of this happening?
Oh, we are. And I would say there's two really important parts to that question. One is the one that you said, talking about not really feeling the pain in the UK. In the developed world, the debasement of our currency happens slowly enough, we kind of don't notice it. Obviously, if you live in Zimbabwe, you are an expert on the impact of hyperinflation. You know everything about it. And Argentina is devalued 7 times in this century, right? Or in the last 100 years. So if you're in Argentina, you completely understand it. But if you're living in the United Kingdom or the United States, you don't notice it, but it is happening. And my best example of how crappy paper money is, the British pound sterling obviously used to be worth a pound of sterling silver. They have printed so many pieces of paper money, it takes 184 paper pounds to buy 1 pound of sterling silver. So every day you go about your business, you don't notice it, but your currency is very quickly being debased. And even just from a simplistic standpoint, in my lifetime, quarters and dimes were made out of silver. Like, it's unthinkable now, right? We've printed so many of them. There's no way we could print them out of silver. And even pennies, which used to be copper, now are worth way more to melt them than they are as a 1/100th of a dollar increment. So even the least bad paper currencies are pretty terrible. The US dollar's lost 90% of its purchasing power since 1950. Again, it happens slowly. It only happens 3-4% a year, so you don't notice it, but it does happen. So that's kind of half the answer. The other half of the answer is when you talk about hyperinflation, most people kind of think about the price of bread or some consumer good that's in our minds. And what's happened over the last 25 years basically is there's been a split between things that are very easy to produce by the exploding supply of global labor, sometimes called the peace dividend. There's a couple billion people that used to be in communist regimes kind of cut off from the world who are now entering the global market, and they're willing to make flip-flops. And they're willing to make flip-flops at even lower prices than you used to be able to buy flip-flops, right? So you're getting this enormous influx of labor, which is making normal consumer goods cheaper and cheaper all the time. Like a great example would be flat screen TVs, right? 20 years ago, a tiny flat screen TV was super expensive. And now you can buy like a 7-foot wide one for like $800, right? It just gets cheaper and cheaper and cheaper because there's billions of people that are learning how to make a flat screen TV. However, there's nobody on earth that can make another ounce of gold or another Bitcoin or another share of IBM. So no matter how many people are flooding the labor market, and we just had the biggest shock to the labor market in the last 100 years of all the people that have recently lost their jobs. So like I'm not even remotely forecasting inflation in the consumer price index basket of goods, right? With the notable exception of toilet paper, that might be the one consumer item that is going to go up in price. But for like flat screen TVs, everything else, all that stuff, but it's because you can make an infinite amount of those. Things that cannot be quantitatively eased, like gold, like real estate, like stocks and Bitcoin, those are going to go up relative to where they would be otherwise. And that's the super important statement is the US stock market is down 26% since the beginning of the year. If we hadn't printed $2 trillion, it would be down 50%. And so, yes, that's the whole objective of these policies, to inflate the price of things. And stocks are just kind of the most famous barometer, but they'll inflate the price of all fixed quantity things: real estate, stocks, gold, Bitcoin.
Next up, I talked to Dan more about the macro economy post-coronavirus, but before that, I have a message from my amazing sponsors. So firstly, let's talk about my new sponsor, sportsbet.io. So, fancy your chance of winning some Bitcoin this weekend? Sportsbet have organised the premier What Bitcoin Did poker tournament, and they have put up 1 Bitcoin in prizes, and there is also a bounty for taking me out. If you check out my Twitter, you can find out how to register there. Now, you should know who sportsbet.io are. They are the company that put the Bitcoin logo on a Premier League shirt. And after inviting me to watch Watford play a couple of times, they asked to sponsor the podcast. And with all this crazy coronavirus shit going on and sports ending, I was kind of thinking, maybe they won't come through with it. And they got in touch and they're like, Pete, don't worry about it. We got you. We want to support the show. So I registered. I've been checking out the site. I've been having a play. I am now a massive fan of Russian ping pong, the only live sport which seems to be happening right now. But not only that, they've got bunch of other stuff on the site. They're offering markets for esports, including eFIFA. They've got their Bitcoin casino and also my favorite, the poker rooms. So hopefully I will see some of you in the poker tournament this Sunday. If you want to find out more, head over to sportsbet.io, which is sportsbet.io. Also, we have my other sponsor, CoinTracker. And I caught up with Chandan this week. I asked him how it's going, and he said, look, Pete, we've had a bunch of people inquire, a bunch of people have come via the show. So that's super interesting because I did get a bit of stick. People are like, why have you got a tax company on? Listen, none of us want to pay tax, right? Tax is bullshit. I don't want to pay it. But there is a reality that if you don't pay your tax, you're running a risk of the man coming after you. Look, it's your choice if you don't want to do it. I pay my tax because I don't want to go to jail. And do you know what? When CoinTracker got in touch, I checked out the software. It could not have been easier to use. Literally 2 minutes it took to upload my wallets and my exchanges, and there it was. There was my tax calculated, sent off to my accountant, all done. Now, filings for CoinTracker work in the US, UK, Canada, and Australia, and it's free if you've got less than 200 transactions. If you've got more than that, if you're a crazy trader and you've got hundreds of thousands of trades, then you can get a 10% discount. You just need to use the link cointracker.io/A/WBD, and CoinTracker is CoinTracker. It's interesting. I interviewed Raoul Powell the other day. You know Raoul from Real Vision. And,
I know him from way back. When I was in Tiger
back,
Management, he was my contact at Goldman, and then he and I did just sit down for an interview a couple days ago, so I'm very familiar with his current views.
So I asked him because I post all my Bitcoin shows to my Facebook, and I'm always telling my friends, and there's barely ever any interest. And even right now, as the government in the UK has stepped in, often offering to pay 80% of wages, a lot of people my friends have been saying, "Oh, this is great. I'm protected. This is good. They're rescuing the economy," but none of them understand what this influx of new money means. And I've been saying to people, you need to have a think about this. You need to understand the potential risks of this. So I turned around to Raoul and I said, look, if you were going to give some simple advice to people who are listening to this, people who are just going to work and they're coming home and, well, they're not going to work at the moment, but generally speaking, they would be going to work, coming home and just having a little bit of time in the evening. What would you do? And I'll tell you his advice. He said, one, you need cash, but you want physical cash. Be careful of the banks, so make sure you got some physical cash in the house. He said, make sure you cut your spend, be prepared to hustle, and then he said, own some scarce assets like gold and Bitcoin. So that was his advice. And the funny thing is, look, I'm a Bitcoiner, Dan. I don't own any gold, but I've also been tracking the Bitcoin price through this crisis, and I was thinking, actually, I probably should have a good balance between gold, Bitcoin, and cash. Where are you with this kind of position at the moment?
Yeah, so I agree with that sentiment, is that in an era where, paper money is the least scarce thing on earth, they're just printing it at 10% of GDP clips, literally unprecedented amounts are being created. So that is not going to go up in value. The things that consumer goods, you can make lots of them, that's probably not going to go up much. But the scarce assets will. And so, gold's obviously a candidate, and it's been, a great store of wealth for 5,000 years, so it's not going to go away tomorrow. I think Bitcoin's better than gold, but they're similar. And if somebody said, hey, your choice is you can either hold a bunch of paper money or a bunch of gold right now, you got to buy the gold. Gold's going to do way better than paper money. And in fact, gold's up on the year when everything else on the planet is down, right? The oil's down 56%, the Nasdaq's down 18%, stocks are down 25%. So having gold be up, proves my thesis. And it's notable, Bitcoin's almost up on the year. It's down just a tiny bit, about 5%. So I agree with Raoul's thought, is that, when they're increasing the supply of paper money at just these astronomical rates, you kind of want to be in something that they can't print more of. And you can't print more gold. You can't print more Bitcoin. You can't print more, IBM shares or whatever, anything that's going to be protected. But the stock market is, it's trickier because, they have earnings issues and all that. Whereas gold, the earnings never change on gold and Bitcoin. So I think the safest place to be is in scarce assets that don't have any impact. And then, I actually really do believe that this is going to be a really important time to prove out the functionality of Bitcoin. Mm-hmm. And a line that I put in our investor letter, I think it still resonates with me. Bitcoin was born in a financial crisis. It will come of age in this one. And I really believe that's true. We're already seeing it. Satoshi created Bitcoin essentially to, as a response to the last financial crisis. And the use cases are really going to shine here. And we're already seeing it. So many businesses are essentially kind of freezing and not working, whereas Bitcoin still works great. And we're investing in a bunch of companies to help people move money across borders. They're all seeing record months of Bitcoin use. And a lot of them don't actually advertise that it's Bitcoin that actually is doing that stuff behind the scenes. They just say it's remittance or money movement or whatever. But they use Bitcoin to move money behind the scenes. And they're all seeing record volumes this month because, Bitcoin works great. There's no barriers. It's instantaneous. It's free. We're invested in one company that has kiosks in grocery stores, and that's the only thing that's open right now. And so if you want to send $500, you can go to your grocery store and feed the paper money in the machine, and the money will pop out in Mexico or the Philippines or wherever you're trying to get it. So I really think that this will be a test. Basically, in a year or two, when we look back, Bitcoin and blockchain is either going to have been very impactful and it's off to the races, or it will have failed.
I think I know one of those businesses you're talking about as well, because I was texting my buddy last night. Doesn't live far from you, Michael Dunworth.
Oh, yeah.
He's from Wire, and I was texting him about it last night. And so let me ask you, one of the things is, if we're seeing record use of Bitcoin at this moment, but the price itself crashed, and there was a lot of correlation there between what happened with the S&P. We are seeing a potential decoupling right now. What do you think is going on there? Do you think the speculation is out of kilter with the actual use? Is that something you're tracking?
Yeah, so the hope is that Bitcoin is uncorrelated with the rest of the world. And, there was a time, when I started trading, everything was uncorrelated. I was a bond trader, and I came to work every day, and I just thought about interest rates. I had no interest in what was happening in oil. I had no interest in what the S&P was doing. I was able to just trade my market. And then portfolio theory took over, and basically everybody bought the same portfolio. Everyone has a bit of commodities, everybody has stocks, everybody has bonds. And even, our business, alternatives, isn't alternative anymore. Everybody's got them. They're not different. And so crypto is the one thing that is a new asset class. So it's really still statistically uncorrelated. It has very low correlation over long periods of time. However, there's an asterisk on that. When the world freaks out, it is correlated. And so in our investor letter, which if any of your listeners want to see, it's on our website, has a graph that shows there's been 5 big downdrafts in the S&P 500 since Bitcoin was liquid to trade. And in each of those, Bitcoin did become positively correlated with the S&P and did drop with the S&P. However, that correlation breaks down after about 8 weeks, and it then goes back to essentially zero correlation. And that's actually how we've traded it through this crisis. Is right when the scale of this was becoming apparent, we took our risk down, sold cryptocurrencies. We actually increased our exposure to Bitcoin. We can talk about that later, but we essentially took down risk, but only for a couple of weeks. And now we're back to full limit long. And cryptocurrency has been grinding up over the last, basically since about March 16th, so 2 weeks. And I think it's going to take a few months for the whole world to kind of sort through their own problems. Most money managers, they're not thinking about new assets they can invest in. They're thinking about their kids and their family and, what they're doing to protect themselves. But over the next couple of months, people will start kind of refocusing on new opportunities. And, I think the crypto markets will really explode about, 3 to 9 months from now, basically. Like not right now, but once people really have the time to look into it, they'll really explode. I from all the cycles I've seen over 35 years, I have a very strong intuition that Bitcoin will hit a record price within the next 12 months, and maybe like way higher than that.
Interesting. Okay. Before we just get into the detail on the Bitcoin, what is your, and it's as short as answer as you can give, but what is your personal thesis on Bitcoin?
My thesis is that it's kind of, when there's a technology that's disruptive, it's called a category killer. Bitcoin's a serial killer. It's going to go through dozens of different industries. And that's why I think it's so valuable, is that, some people call it digital gold. Yeah, and it is. It's awesome. It's digital gold, does that. But you can keep registries of all kinds of other non-financial assets on a blockchain. You do so many different things with Bitcoin and blockchain. And so that's why I think it's going to rip through dozens of different markets. And if you think about it, the internet changed everything except for finance, right? Like banks are basically exactly the same as they were, 60 years ago. And, all those entities are all basically the same. Western Union's been around for 160 years. Amex has been around for 160 years. All these companies are super old. Wells Fargo used to be a stagecoach for gold, right? These are all really, really old companies that haven't changed much. And that's basically what Bitcoin and other cryptocurrencies are going to do, is bring the internet to finance. And it's going to massively drop the cost of sending money. The analog I've always loved for Bitcoin is it's money over IP. And VoIP completely disrupted the telephony business. Like back in the day, when I was in college, you had to really think about how much you were going to spend on the phone because it was expensive. And there was a point in American history where AT&T was 16% of the market cap of the United States. And now you never even think about it. Like you stream Netflix on your phone, right? And it's all because we're not controlled by a monopolist anymore. Back in the day, if I want to call you, I had to pay AT&T and British Telecom, and that's the only way I could get in touch with you. And now you can route money, or you can route voice over IP, and it's dropped the price so that we don't even notice it anymore. The quantity of data has exploded so much that we literally don't have enough copper on Earth to run the internet on copper wires. Like if we try to run the internet now on copper, it would literally physically, we don't have enough copper. So that's basically what's going to happen in the money business, is we're going to drop the cost of sending money so low that it's going to bring so many new people into the financial markets. Micro labor, micro payments, all these really cool things are going to happen. So I think Bitcoin and other blockchains are going to disrupt the current oligopolists that control money movement. And think about this, right? The average remittance cost is 9%. And, we're in the financial markets. That's just a number, 900 basis points, whatever. That's a month's wages for the migrant, right? The migrant has to work for an entire month just to pay their remittance company. And their family only gets 11 months' wages. That's crazy. And Bitcoin's easily going to take that out. And so when we look back, but it's going to take a while, it's going to take a couple decades to really do all this. So when we look back, 10 or 20 years from now, I think it's going to have a huge positive impact on the world. And the reason, kind of sum up this whole, very multifaceted discussion, is the reason I like Bitcoin is it's the miracle whip of finance. Like you can do so many different things with it. And it's taking on all the biggest markets. Like if you're investing in some kind of new medical device and, there's only 100,000 people on earth that have that condition, you can kind of figure out the most you can ever make investing in that thing. But this is taking on literally the biggest things on earth. It's taken on wealth storage. It's taken on digital payments. It's taken on remittance. It's taken on gold. Gold's a $10 trillion thing. Bitcoin only gets 4% of the gold market. It's be a home run. And that's why I always love when people say, oh, Bitcoin failed. It's just digital gold. It's like, man, that's the best failure I've ever seen. That's awesome. And then it's taking on money. And money used to be a $100 trillion thing. And now it's $104 trillion. It's growing fast. So if Bitcoin gets, even a very small fraction of the market for money, it's just going to be huge. Money is one of the only faith-based things out there, and people get pretty heated about it. And there's often people like, hey, the US dollar is awesome. We don't need another currency. There's already 200 currencies on earth. What's 201, right? Like 202. That's my view, is we already have 200 currencies. All of them are depreciating at a pretty rapid rate, and 150 of them are just terrible. And so you have one like Bitcoin that's going up. That's great.
So we've got you as on Team Bitcoin now. We've got Raoul Powell on Team Bitcoin. We've got Dan Tapera on Team Bitcoin. We've got my buddy Travis Kling. He's on Bitcoin. So we've got people coming in from the traditional markets in here. But you must have a lot of friends who are, we'll call Luddites, who aren't in Bitcoin yet. But you must be talking to these people. Are you seeing more interest? And what are the rejections you're still getting from your friends from the old traditional markets?
Oh, that's a great question. Yeah. So, I grew up as a global macro investor, and I worked with Dan Tapiero and, Mike Novogratz and, all these guys, and huge take up of blockchain and Bitcoin from that group, right? Because we're trained to see disruptions. We're trained to see things that have very asymmetric returns. yeah, you could lose 1 times your money, but you might make 40 times your money. And, so it's been fun. I was talking to Raul, who I've known for 30 years too, about this, that people that do what we did in the old days are really drawn to this. Alan Howard and, all these guys that are trained to look for these disruptions just can't not be excited about Bitcoin, right? So it is kind of like a old friend network, all these people I've been, doing business with for a long, long time. So when you ask, like, what do my friends that are negative on Bitcoin say? That is my challenge for your listeners. I would love somebody to send me an anti-Bitcoin paper that's more than 4 sentences by somebody that's reputable. And I have been looking for that for 8 years, and I haven't found it. You get the Warren Buffett's like, oh, Bitcoin's rat poison or whatever. That's fine. He's a genius investor. If he wants to do his little one-word soundbite thing, that's great. But like I'm talking, I really would love to read the negative case by somebody who's respected as an intelligent investor that's more than like 2 or 3 sentences. Because there's some famous hedge fund managers that occasionally, say it's a bubble or whatever, But I really am, to promote intellectual honesty in your investing, you should always be challenging your views. And that, to me, is like the great white rhino. I want somebody to bag a paper written about why Bitcoin's not going to go up that has more than like 3 sentences in it and send it to me.
Yeah, you can't find it.
It really just doesn't exist. You get a couple Paul Krugman articles once in a while, but like there's never anything with any substance that's negative. And so the point being, I basically don't have too many friends that are, essentially vocally against it. Like I'm sure there's some people out there that aren't long and don't want to say it, too loudly, but I really have never heard a very cogent argument of why not to be invested.
See, I've always compared it to CDs to MP3s, and I was buying CDs probably for at least 3 or 4 years longer than I should have. I kept buying them because I wanted to hold that CD. I wanted the inlay card, and I refused to buy MP3s. And then I did, and then eventually I stopped buying CDs, and now I have a cupboard full of CDs that never get touched anymore. And I just think for some people, they cannot get over that thought that they're going from a physical asset like a lump of gold, even if they don't own it, they know it exists somewhere, to this concept of a digital gold. I think it's too much for people to get their head around, and sometimes it's too complicated. And also it may shift. I think for someone like Warren Buffett, it might shift his world too much. It might just be too big a step for him to take.
Yeah, so I love that perspective, and it reminds me of another very positive story I wanted to share with you, is the use of USDC stablecoin has exploded in the pandemic. It's up 60% since the beginning of March. And to me, that's another great proof of blockchain working. That if you have your money in a bank that in the old world provided trust, right? And that's the term Satoshi loves to use in the white paper. But that trust is levered 40 times, and all the assets you're leaving on deposit with your bank, like Lehman Brothers or whoever it would be, are then re-lent out to 39 other people. When something bad happens, you could end up losing all of your money. If you own USDC, you can transfer it around the world instantaneously. You can do whatever you want. And it is backed by 100% US Treasury bills and no leverage. There's nobody else involved. There's no other, 40-to-1 leverage. And so when the shit really hits the fan, I think I'd rather own USDC than, have my money in XYZ bank, right? And governments often think things are too big to fail or whatever, but you're going to see things like USDC do really well because it is safer, right? There's less points of failure in the system. And so I would keep a couple of things, I'm keeping my eye on are the volume of USDC, the volume of transactions at these cross-border payment companies and payment companies like Wire. Those are the indicators, and they're all real time, of whether blockchain is proving itself in this crisis. And so far, It really has.
Yeah, it's interesting you should say that. I'm not sure what the insurance is in US banks, and I think the UK is up to about £80,000. But we did see in Europe, we saw a haircut on the bank accounts in Greece and Cyprus, I think it was. So it is a potential risk, but there's also that potential risk that there may be some limitations on how much money you can take out. As we've had a run on the toilet rolls, we could have a run on cash. It is a possibility. And I had similar, been thinking about, should I actually be transferring some of my pounds into some stable coin somewhere? It's definitely on my mind, like you. So that is an interesting point. All right, so listen, you know these guys. They're sat on a lot of money. We're in a very weird time. Investors want to invest. Some of them are sat on an awful lot of money. What are their options now? We know Bitcoin is an option. But what are their other options? Is it gold? Is it Bitcoin? Are there other things I'm not thinking about? Because they're going to have to start moving this money around at some point.
Yeah, so since I got mesmerized by Bitcoin, I haven't really followed the other securities markets like I did back in the day. So I'm not super close to it. But my hunch is I think that equities are really going to struggle because I think that, obviously a month ago they're at record high, so it's not like they started out super cheap. And I just think people are having a very hard time getting their heads around how big this economic impact is going to be. And as an example, I'll use a phrase that you, I think, slipped in earlier, a V-shaped recovery. And people are already starting to talk about that. I think this is the most complicated and really crazy environment I've ever experienced, and so much uncertainty. The only thing I'm certain of, it's not going to be a V-shaped recovery. Like, I don't know what it's going to look like, but the only thing I know is it's not going to be V-shaped, because you mentioned September 11th. September 11th is a great example of a V-shaped impact. Every plane in the United States was grounded for 3 days, and then every plane got in the air and everything restarted. This thing is so hard to restart. There's a great photo of, Wuhan opened up, and like the movie theater in Wuhan, 0 people, right? Like, who's going to the movies? Like, even if, on April 30th, the CDC or some entity says everything's totally fine, everybody get back to work, it's all awesome. Man, I think it's going to be hard to get people to come back to work, and especially to come back to their old things like, going to gyms or going to movie theaters, those habits. It's a psychological impact, right? I mean, it's not an economic thing. It's a psychological impact. So I think it's to be very slow getting back. So that means the economy is going to be, grinding for a lot longer than people expect. And there was an article that I highlighted in our investor letter that was an op-ed in the New York Times, is to fight coronavirus, we got to get medieval on it. I love that. It's a great line. And it is what we have to do. We have to go to super medieval lifestyle. We all have to basically stay within a couple of miles of our homes, which is the way people lived in the Middle Ages, right? The only problem is medieval GDP was low and stagnant, right? Like, if we all have to combat this virus by essentially not moving, it's really hard to produce goods and services. And so I think it's going to be hard on equities. That's a long answer. It's like, I don't think I'd be buying equities yet. I would be buying things that have no impact from the virus, like gold, that are in fixed quantity. So gold's one. I think Bitcoin's a great example because it has probably a positive growth potential from this thing. And then there are going to be things like distressed debt. There are businesses that typically do well after these disruptions that have essentially been doing nothing for the last 10 years because there's no distress in the world, that'll now be great types of investments. So if I were an investor, I would, allocate a bit of my money to distressed debt, a bit of my money to gold, a bit of my money to, buying things like Bitcoin and other cryptocurrencies.
You did mention real estate before. So funny enough, this when I bought this house I'm in right now, I bought it in June, I think it was June 2008. I bought it the month before the crash, the big crash. So instantly the price dropped. And I was just about to move house. I accepted an offer of mine. I'd made an offer in another house. And then, we can't do anything right now at the moment. But I thought there's a chance that the house prices might crash. But you mentioned earlier that might not. What's your kind of view on real estate? Oh,
my view would be, I think all assets that are kind of income based, like houses or equities or whatever, are probably going to go down a lot, because we've just endured a massive shock. And you called the last recession the big recession. No, that's the small recession. The one we're in now
This
is the big recession,
one.
is unfortunately the truth. And so I think they will go down a lot. Obviously, the governments are fighting that with fiscal policy and, increasing the amount of money that people have by $2 trillion. So that'll mitigate the damage to stocks and real estate. But, you'd imagine they're going to reprice much lower. Many stock markets are already down, 30, or in Latin America, it's down 40%, and I would just think real estate's got to follow stocks, but slower, obviously. What happens in real estate or venture and things like that is basically just transactions go to zero while the buyers and the sellers try and figure out where the real price is, whereas stocks trade every nanosecond. So you get a real-time reset.
Right. Okay. All right. Well, listen, look, this has been everything I thought it would be. Glad to finally get you on. Just a closeout question, just similar to what I asked Raoul, really. I've got a bunch of listeners who maybe aren't macroeconomists, maybe don't fully understand how the economy works, going through various situations at the moment, maybe into Bitcoin, maybe have a mild interest in Bitcoin. What are the kind of things that you would recommend that people keep an eye on? What are the warning signs in the market that you would be looking for that they might not, or even myself here, Dan, might not even be thinking of looking at? And what are the kind of, I know you're not meant to give financial advice, and maybe you won't, but what's the kind of advice you'd give people at a time like now?
Yeah, so to those that are just trying to get up to speed on how the global macro might impact our crypto markets, I'd say we put 8 or 10 pages of our thoughts down in our investor letter. It's welcome for anyone of your listeners to read. And then I would follow things like USDC's total issuance. That's a real-time way to see if cryptocurrency is actually being used by people in this crisis, and try and stay abreast of whether it's actually the fundamentals are actually working. Unfortunately, some of the companies I referenced are private, and so don't share much information, so it's harder for non-investors to stay up on it. But what I'm trying to do is put together essentially an anonymized index of our portfolio companies' traction, so that you can see the change in companies like Wire or Bitso in Mexico, or Veeam. These companies are helping people move money around, and we're going to try and put together almost a real-time index to help essentially prove out our thesis that blockchain is helping when everything else has kind of come to a frozen stop.
All right, cool. Well, listen, look, appreciate you coming on, Dan. If people want to find out more, where can they find this investor letter? How can they follow you?
Yeah, so love to help spread the gospel here. Our website, PanteraCapital.com, has tons of information, lots of papers other people have written, books that are interesting. Our investor letter, if somebody wants, the easiest way is just send an email to IR@Pantera Capital for our investor relations department. We'll put you on our investor letter list. We're actually hosting conference calls. We're really trying to be transparent and get information out to people in the community. So feel free to get engaged.
Fantastic. Look, the investor update I saw was great. It was a really healthy way to look at the market. It wasn't too in depth. Someone like me, who isn't a macroeconomist, I was able to follow it very well. But look, appreciate getting you on. Finally get to find out the Pantera story. And look, wish you the best through this, Dan. Stay healthy. Stay mentally healthy and physically healthy. And I hope we all get back to normal as soon as possible.
Yeah, thank you so much for having me on, and I really look forward to being back on anytime.
Okay, so what did you think of that? As I said in the intro, I've wanted to get Dan on for a while, and he definitely did not disappoint. Well, he just did, actually. He really disappointed me. I was a bit pissed off he didn't name his fund after Pantera, the thrash metal band. But outside of that, he did not disappoint. I really enjoyed this conversation and hearing how Dan sees this all playing out during and after coronavirus. He sounds super bullish on Bitcoin, which is always good to hear from such a veteran investor. Now, if you haven't checked out my recent episode with Raoul Pal, I think you will really enjoy that one as well. Go back and have a listen. That was episode 207. I am going to be trying to get more financial people on the show to help us all navigate these complicated times. If you do have any questions or feedback, make sure you get in touch. I'm always keen to hear from listeners. I do reply to almost anyone. My email address is hello@whatbitcoindid.com. And if you do want to check out any of my other content, please head over to defiance.news. You can check out my non-Bitcoin podcast there, and you can also check out the couple of films I've made. Some of it is Bitcoin related. I went to Colombia and Venezuela to look at the crisis there. Yes, that's all at defiance.news. And I do have a YouTube channel, which is youtube.com/c/Defiance TV. Listen, look, I hope you're doing well. These are strange times. Anyone struggling, you can reach out to me. I do reply to all my emails. Happy to chat to anyone. And yeah, stay safe, stay healthy in mind and body, and I will see you all soon.